Over $100 billion just disappeared from the crypto market, and most people still don't understand what really happened. Social media screamed crash. Charts turned red. And weak hands panicked. But this was not a crash. This was a controlled move, and if you sold, you played directly into it. Let me explain. What most retail traders don't realize is that real crashes come with chaos. Broken structure. Liquidity gaps. Forced liquidations across the board. That didn't happen here. Bitcoin barely moved. Ethereum held structure. And XRP, it followed liquidity, not fear. So what actually caused the drop? It wasn't bad news. It wasn't regulation. And it wasn't the end of the bull cycle. This was a liquidity reset. Markets had become overcrowded. Leverage was stacking. Funding rates were climbing. Smart money needed room. So liquidity was pulled fast, aggressive, and surgical. When you see $100 billion wiped without panic volume, that's not retail selling. That's positioning. And here's the part nobody is talking about. During moments like this, institutions don't exit, they rotate. They shake out emotional traders. They reset derivatives. And they accumulate quietly while sentiment collapses. This is exactly how previous bull cycles started their next leg up. Now let's talk about XRP, because this is where the narrative gets interesting. XRP didn't break structure. It didn't lose key support. And it didn't move independently. It moved with macro liquidity. That tells you something important. XRP is no longer trading like a speculative altcoin. It's trading like an asset tied to infrastructure flows. Tokenization. Cross-border settlement. Institutional rails. While retail focuses on red candles, institutions focus on positioning before announcements, not after. And history is clear on this. The biggest moves never come during hype. They come during confusion. When headlines say crash, but structure says control. When retail panics, but smart money stays calm. This is why most people miss real opportunities. They react to emotion instead of structure. They sell weakness instead of understanding it. And then they watch price recover without them. Now I'm not saying price goes straight up from here. Markets don't move in straight lines. But this move was not bearish. It was strategic. And if you understand that, you stop fearing volatility and start using it. This is why patient money wins. This is why long-term positioning matters. And this is why the next move will surprise most people again. If you're watching this, stay sharp. Because when the narrative flips back to bullish, the accumulation phase will already be over. This is CryptoLabsNews. Stay focused.